Hello and welcome to Flores Online. In today's video, we're going to be looking at the topic, the risk of holding NFTs they don't tell you about. If you're new here, be sure to like, share, and subscribe to this channel. NFTs are getting increasingly popular and you've probably heard something about them. They're extremely popular in the crypto world and they're also gaining traction in other sectors. There are a lot of tips and analyses floating around these days, and you might be led to believe that holding your NFT is the safest approach to achieve big profits. But this isn't necessarily the case. In today's video, I'm going to share my experience of holding the Prime Ape Planet NFT by PAP and the consequences it had. So recently, I participated in the Prime Ape Planet by PAP project. I believed I was going to make a lot of money and that this would be my big break. Turns out that I was very wrong. As usual, the majority of holders recommended not selling for less than 8 Ethereum, which gave me a lot of hope for the project. Because of the Prime Ape Planet's amazing success, I was also very optimistic. I was ecstatic to be added to the whitelist. This is it, Sandy, your big break, I thought to myself. My initial idea was to keep one NFT and sell one. The floor price for the NFT was 1.5 Ethereum when it was released. Then, shortly after the mint, all of the paper hands began selling the NFT for a low price, and the floor price decreased as a result. That was very frustrating for those of us who wanted to keep holding. Before the reveal, I received an offer of 0.8768 Ethereum, but I declined it and opted to maintain holding since I believed the floor price would continue to rise, and I would be able to sell my precious NFTs for a good price. But things continued to worsen. Currently, the floor price sits at 0.167 Ethereum. After a bit, I received a 0.1 offer which I refused. Regardless of the fact that I lost the majority of my money, I did learn something important. By holding, you may be incurring significant risk. If I had sold to the first individual who offered 0.8768 ETH, I could have profited over $5,000, but my desire and ambition got the best of me. One reason a lot of investors believe that non-fungible assets are riskier than cryptocurrencies is the lack of liquidity associated with them. For example, when an investor wishes to sell Bitcoin, BTC, they can do so quickly and easily and sell to an order book of buyers. If a seller decides not to sell their Bitcoin today, they can easily return the next day and sell their Bitcoin to prospective buyers. However, non-fungible tokens, NFT, are one of a kind, making matching sellers and purchasers is much more difficult. Because there is only one Mona Lisa, there is no market for Mona Lisa paintings. Similarly, compared to fungible currencies, NFTs have a limited amount of liquidity. One explanation is that collectors prefer to maintain their NFTs instead of trading them on risky marketplaces. Another problem is that NFTs are sold bilaterally on markets with only a small number of potential buyers for each transaction. It can be easy to measure the liquidity of fungible assets, like stock shares, by dividing the total number of shares traded in a given period, like a month, by the average number of shares that were on the market at the same time. It's easier for people to buy and sell shares in a company with high turnover rate. But how do you figure out the liquidity of a unique non-fungible asset? People who work in markets where there aren't many transactions per item, like real estate or collectibles, use two main types of liquidity measures: time on the market and level of transaction activity. If you want to measure real estate liquidity, for example, you can look at how long it usually takes for a home to be on the market and for it to go on sale. In terms of NFT, it would be termed the average time between when the NFT was put on a secondary market and when it was sold, in NFT terms. Time on the market is difficult to measure for NFTs, according to Gauthier Zuppinger, Chief Operating Officer of NFT data source non-fungible.com, because thousands of assets are listed on the market for extremely high prices. Some punks are even listed for billions of dollars, and everyone is stuck, waiting for the right time or hoping for a whale to buy it. On the other hand, many people don't list their assets but are willing to accept bids, and these are the people that make holding very dangerous. Because they sell these assets at ridiculous prices and devalue the asset, thereby leaving the holders with not so valuable assets. The second type of measure of liquidity is based on how many transactions there have been. Non-fungible.com, for example, looks at NFT liquidity by looking at how much of a certain type of asset has been traded on the secondary markets, which is how non-fungible.com measures it. This can be done by dividing the number of unique assets that have been traded on the secondary market by the total number of assets that are available. Another reason why holding NFT is dangerous is because of the pump and dump strategy. The pump and dump scheme is a type of scheme in which a person or a group of people purchases a large number of NFTs in order to artificially increase demand. Once successful, these schemers will cash out when prices are high, leaving those who were not involved in the scheme with assets that are no longer worth anything. Pump and dump scams are currently a serious problem in the NFT and cryptocurrency sector. Furthermore, NFTs can be difficult to understand for both specialists and newbies. When you buy one of these non-fungibles, you're not just obtaining a digital asset, you're also purchasing a piece of art history. Despite the fact that you own this one-of-a-kind token, individuals can find replicas of the same artwork all over the internet. Put another way, there appears to be nothing stopping people from downloading and presenting such files on social media, effectively showing off despite the fact that you have invested a significant amount of time and money into that NFT art. What is the monetary value of an asset that is not in your possession? The answer to this question will depend on how collectors respond in the future, and those who have already invested in NFTs may find themselves with a digital record that isn't worth enough. While the integrity of a blockchain is undeniable, non-fungible tokens, NFTs, can be utilized to commit fraud. In reality, a number of artists have recently reported discovering their work being sold as NFTs on online marketplaces without their knowledge or agreement. This clearly goes against the objective of using NFTs to ease the selling of art in the first place. When an NFT is used to authenticate a physical work of art, it creates an individual token that can only be used by the person who holds the token, so ensuring that the token holder also has ownership rights to the original work of art. If someone builds an electronic image of the original art, attaches a token to it, and then offers it for sale in a virtual marketplace, a severe problem develops. There is no reference to the source work in this instance. There is a link between the token and a forged replica. All these factors can render your precious NFTs worthless. NFTs are a fascinating invention that is gaining a lot of attention as their applications grow. The attention-getting price tags on certain NFTs are adding fuel to the flames. However, because NFTs are highly illiquid and volatile, you should proceed with caution when considering purchasing these assets. It's not a good idea to buy them in the hopes of getting triple or quadruple-digit price returns. Nonetheless, if you want to join the blockchain revolution and view NFT ownership as a viable option, go for it. Please, however, do so in a responsible manner. Don't invest a lot of money in NFTs and always go for low-cost positions. Otherwise, you may find yourself in a difficult financial and emotional situation. Before you rush into something just because it's popular, make sure you do your research. When it comes to non-fungible tokens, it's far preferable to be aware of all the risks and obstacles ahead of time. By removing the dangers, you will be able to buy and sell NFTs in the market with ease. The people behind PAP's Prime Ape Planet initiative are working on something significant. Who knows, maybe the floor price will go raised as a result of this. Do you want to be kept up to date about Prime Ape Planet's new initiatives and special offers and other NFT stories? Then press the notification bell to be alerted when I release my next video. Thank you for taking the time to watch, and see you in the next video.